What's going on YouTube? Welcome back to the channel, guys. In today's video, we're going to be talking about the CPI aftermath. And before we start diving into this video, guys, make sure you drop a like, comment, and subscribe to this channel. More videos are going to be coming, keeping you guys updated with what's going on in the market each and every week. Now, diving into CPI, I see a lot of back and forth across my timeline today. You got traders who did well, and then you got a lot of traders on the internet right now who are frustrated trying to trade before or ahead of CPI, causing them to overtrade, revenge trade, and causing with FOMO because we get bigger moves from the CPI event. Now, if you don't know what CPI is, CPI stands for Consumer Price Index. So the Consumer Price Index actually tracks how expensive it is just to do normal everyday things for the regular consumer like you and I. So food, gas, basic goods, everything that we're spending our money on. We're trying to track with inflation, how expensive is it to actually purchase this for the normal consumer like you and I. The reason that the markets or investors actually care about CPI is because this is going to tell the Federal Reserve if they should be hiking interest rates or lowering interest rates, which will also affect how prices go up or how prices go down, whether the rates are getting hiked or the rates are getting cut that we see made with the FOMC. So with all this usually causes a large spike in the market, usually CPI, also NFP. We see big movements coming in the market. So a lot of traders are excited about CPI. Usually we can call it gambling, ahead of it. Now, of course, some days in the market with CPI, even NFP, even sometimes FOMC, you can get in the right position beforehand and make some good money. But more often than not, you're gambling ahead of these news events because we don't know how that data is actually going to affect the market. It could come out good, the market could still spike up. It could come out bad, the market can still spike up, especially if you're trading assets like gold, silver, you're trading the NASDAQ, you're trading the S&P, all these futures contracts. We tend to see the market react, but based off those actual numbers of data, the market honestly just does what it wants to do off its first initial reaction. We may even see a later reaction, which people don't understand as well. Now, for myself, when I used to trade CPI, I would have some months that were really good, and then I would have some months where I was completely blowing the account. So that's what I want to stop you guys from doing, because CPI or big news events like that is only going to cause FOMO. It's going to cause revenge trade when you're wrong about the market. Or when you're right about the market, now you're overconfident. Now the next CPI, you want to risk more, and then that's going to cause you to lose more if the market goes against you. And you can see how fast, once we go over to the charts, how fast the market can move during these news events. The last thing we want to do is be in the market having to make something happen. Once you get in that mode, you need to take a break, step away from the charts, come back with a clean slate. The market does not owe you anything or need to give you anything. So my rules for trading CPI, I will trade that night ahead depending on how the setup looks, and I'll trade that day before. Monday, we typically do our breakdown in the morning at 8:45. So I did end up catching a really nice ES trade on Monday, and then Monday night on our live stream, we caught a really nice move here on gold, trading into the upside, back into the new day opening gap. Was able to profit $1,000 on that ES trade earlier that day, and then I had a loss on oil during the Asia session, and then we followed up with a win during Asia session on gold, so I ended up making 700 that night just from those two plays ahead of CPI. Now, if you guys been on the channel since the beginning of the year, I already posted last week exactly what I was looking for in the charts, and we got there ahead of CPI. So that's going to be very important for later in the video when we head over into the chart. So if you haven't, make sure you stop the video, go back and watch my outlook from the previous week, and then you'll see exactly what we're about to go into once we head over to the charts. But the main thing, guys, like I said, if I get a trade the day before and even that night before, I'll take that trade. Usually CPI, after CPI comes out, if there's a setup that comes in, usually we see more sporadic movement, especially with CPI. So if I don't see anything by noon, I'm just out of the market. That saves me from taking any bad setups or trying to FOMO because I see a huge spike in the market. Now, before we head over to the charts, I did want to read a message that my student sent in the chat yesterday. This shows real progress, guys, over a short period of time, and this is my goal for everyone on this channel. And this kind of feedback means a lot to me, so I do appreciate it. Shout out to Tracy. She said, I was part of the very first Futures Bootcamp, and it was a great experience. I learned so much throughout the class. The Futures Bootcamp is suitable for all levels of futures trading, beginner, intermediate, and advanced. Coach Jordan was extremely patient, very informative, and explained everything in a clear and easy way to understand. His strategy truly works, but it does require patience and consistent practice. I would highly recommend this boot camp to anyone who is serious about the futures market. So shout out to Tracy, man. That just warms my heart being able to see that, you know, the hard work that I put in over the 7 years of trading. We got people coming into these boot camps that's actually getting value out of it. And that's what's important. But I want you guys to pay attention to something specific she said. She said it takes patience and practice. That's going to be the main takeaway you'll ever get from me, whether you're on the channel, whether you're a part of the team. I can only show you so much, but for you to be your own trader, for me to show you how to fish, you got to put the work and the time in, and it's going to take patience. This is not something that's going to happen overnight. I didn't get to the point where I'm at here now today. It took me 7 years just to get here. It may not take you 7 years to go full time in trade, but it's definitely not going to happen doing nothing, just consuming information and not taking any actionable steps towards your future as a day trader. All right, so let's head into the charts. So as we can see here, this is the move from CPI here on gold. We ran up to the previous day's high. As we can see, the market traded up just around 380 ticks to the upside. Let's say overall with this bullish bias, we could get in here as the market is breaking back above, and you know, you can get a good move to the upside. But more often than not, you're going to get faked out, or a wick is going to come in the opposite direction before getting that move ahead of CPI. This is why I don't trade ahead of it, and I will also look for a continuation setup potentially after if the market holds. So in this case, we have a buy side imbalance form here, and I just want to show you guys this on the lower time frame. 5-minute time frame, we came back into that imbalance range, back at the new day open, failed to break higher, came back, retested here again, failed to break higher, came back lower, failed to break back above VWAP. But picture all the times that someone, and I know it's someone that's going to comment in the comments that they try to take these trades here as well, where they try to get in buys here, they try to get in buys here, they try to get in buys down here, all because that first initial shift up from CPI. Now, of course, after the run of a previous day's high, if you're going to take a reversal, that's perfectly fine in this case. But what you will see also happen with CPI is we start to look like price is going to reverse, and then we flop right back in the opposite direction with the overall order flow. So I want to go into the setup that we actually took here, which was Monday night, and that's all we needed. So overall price action, let's start on a higher time frame. Price action is bullish. As we can see, we have buy candle followed by sell candle here. We continue to run out highs to the left, and then we even gap up. This is always an early sign. Once we gap up in the market, once we see the market gap up, especially when trading gold and price action is overall bullish, this is a telltale sign of where the market is going, at least at the beginning of the week. Now, one thing I want you guys to notate here as well, in the video where I was going over my analysis for the week of last week, we were here on Sunday. So I released that video on Sunday, and I was letting everyone know that, hey, if we get this push up and we start to break here, we're going to be aiming for the monthly high of December. And you can see this is what we end up breaching here on Sunday. So all it took was 1 week's time. So if you already know this is the overall target, you guys can watch this channel, figure out these targets, and find the intraday moves up to this point. Because if we look at this on the 8-hour time frame from when price broke here all the way up, we're going over 1,500 ticks to the upside. That's a huge payday. That's just picture with one contract, that's $1,500 made there. That's just 1 week holding this trade over this position from when we broke to the upside. So very powerful stuff here, guys. Heading to the day here on Monday where we actually took the trade, we have our Asia open range. As you can see here, the market ends up coming down, running out the low of the range. When we're bullish, we want to see the market run out lows, and then we're looking to take the market to highs here. So we had that previous day's high there, was looking for that full expansion, but understanding that this is CPI we're trading ahead of, we want to get in and get out because we could still be right about the market. The market fakes us out overnight, and then we get that continuation. So as you can see here on the lower time frame, guys, once we retested our lows, broke back above our VWAP. Entry was here, stops below the imbalance, trading right up to that new day open over 137 ticks with that move straight to the upside. As we can see, we pulled back initially, added some contracts in, and then price continued higher here. So this is all you need. Still was able to take a loss on oil, still made $700 here in the market, even with the market coming back pulling against us. You know, I had my runner set back at break even, so that tapped me out there. And then we had sideways chop until, you know, we started to see the market push up. 8:30, we were sitting right at that new day open, spike, retest it, get this push up. But instead of trying to chase this, you know, we can look for that continuation or just stay out of the market because we already made our position from last night. We didn't need much more. And like I said before, family, this is the same concepts that we go over in the futures boot camp. We're going to be going over structure, patience, and repetition of the strategy in detail. It's going to be for 4 weeks, 2 sessions per week, and all videos will be recorded for you guys. I already got the boot camp scheduled February 2nd, so you got time if you guys want to tap in. I'm going to put the details in the description for anyone serious to learn that's ready to get to it. And with that being said, as always, invest in yourself, and I'll see you guys in the next video.